Audit planning and fieldwork 4.
Audit program. What is audit program? Audit program is the nature, timing and extent of planned audit procedures to be used at the assertion level, for each material class of transactions, account balance, and disclosure, and each program should be tailored to meet the circumstances of each client.
Why audit program is important to the auditor. Firstly, to guide staff in audit work. Secondly, to provide evidence of proper planning and recording of audit work. Thirdly, it is a basis for coordinating and supervising audit work and controlling time spent.
Types of audit program. Standard or pre-prepared audit program. It can be used for audits in all industry. The disadvantage is auditor just merely follow the procedures without thinking of the significance of the procedures. Tailored audit program. It suits to different type of industry, for examples, construction, banking and finance, manufacturing.
Audit documentation. What is audit documentation? It is the principal record of auditing procedures applied, evidence obtained and conclusions reached by the auditor in the engagement. Audit documentation should include all information necessary as to conduct the audit adequately and to provide support for the audit report. Why audit documentation is important. Firstly, as a basis for planning, designing and performance of the audit work. Secondly, as a basis for review by supervisors and partners. Thirdly, as a record of the evidence accumulated and the results of the tests. Lastly, it is a data for determining the proper type of audit report.
Types of files. Permanent audit files. It contain data of historical or continuing and permanent in nature relevant from year to year. The files need updating each year. Examples of permanent audit files are long-term contracts, company's advisors, brief history of the company and organization charts, evaluation of internal control systems. Current audit files. It includes all working papers applicable to the year under audit. Examples of current audit files are copy of the financial statements, audit program, abstract of directors' meetings, supporting schedules, management letters and letters of representation.
Preparation of working papers. Types of audit engagement. Nature of business. Complexity of business. And form of auditor's report.
Ownership. Working paper is the property of the auditor. Confidentiality. Need to maintain a confidential relationship with client. Refer to MIA bylaws confidentiality.
Internal control. Internal control is the process designed and effected by those charged with governance, management, and other personnel, to provide reasonable assurance about the achievement of the entity's objectives with regard to reliability of financial reporting, effectiveness and efficiency of operations and compliance with applicable laws and regulations.
Management and auditors' responsibilities. One of the responsibilities is to detect and prevent fraud and error internal control system. They will evaluate and ascertain the internal control system in deciding the level of testing required. A good internal control system will reduce the amount of audit work required. They are responsible to understand internal control system.
Objectives of internal controls. Authorization. The objective is to ensure that all transactions are approved by responsible personnel, in accordance with specific or general authority before the transaction is recorded. Completeness. The objective is to ensure that no valid transactions have been omitted from the accounting records. Accuracy. The objective is to ensure that all valid transactions are accurate, consistent with the originating transaction data and information is recorded in a timely manner. Validity. The objective is to ensure that all recorded transactions fairly represent the economic events that actually occurred, are lawful in nature, and have been executed in accordance with management's general authorization. Physical safeguards and security. The objective is to ensure that access to physical assets and information systems are controlled and properly restricted to authorized personnel. Error handling. The objective is to ensure that errors detected at any stage of processing receive prompt corrective action, and are reported to the appropriate level of management. Segregation of duties. The objective is to ensure that duties are assigned to individuals in a manner that ensures that no one individual can control both the recording function and the procedures relative to processing the transaction.
Components of internal controls. First, control environment. Includes governance and management's overall attitudes, awareness and actions regarding internal control and its importance in the entity. Control environment sets the tone of an entity. It influences the control consciousness of all personnel and is the foundation for the other components. Second, the entity's risk assessment process. An entity's risk assessment process is its way of identifying and responding to business risk. Once identified, management needs to consider their significance and how it should be managed. Management may introduce plans, programs or actions to address specific risks, or it may accept a risk on cost-benefit basis. Third, the information system, including the related business processes, relevant to financial reporting and communication. Information system includes its accounting system, which comprises the methods and records established to initiate, record, process and report exchange transactions and relevant events and conditions, and to maintain accountability for the related assets, liabilities and equity. Information system includes infrastructure such as hardware and other physical components, software, people, procedures and data. Fourth, controls activities. Policies and AMP, procedures established by management in order to ensure that its directives are carried out. Control activities should be distinguished from accounting system. Control activities are added to ensure accounting system procedures accurate and reliable data. Fifth, monitoring of controls. Monitoring of controls is a process used to assess the effectiveness of the performance of internal control. It involves evaluating the design and operation of controls and taking corrective action where necessary. Management may monitor controls through ongoing activities such as supervisory activities and/or separate evaluations. Internal auditors also contribute to the monitoring process. Evaluation of internal controls.
First, preliminary review. Auditor reviews flow of transactions, how they are authorized, executed and recorded. Second, gathering information, understanding and preliminary evaluation of controls. Gathering information. Usage of internal control questionnaire and flowchart. Understanding of control procedures. To integrate the understanding of the information gathered from the various sources. This can be done by, for example, performing a transaction walkthrough review. 1 or 2 transactions within each of the major classes of transactions are traced through the audit trail of documents. And accounting records and the related internal control procedures are scrutinized. Preliminary evaluation of control risk. In making the evaluation, the auditor should consider the fraud and errors that could occur, and the related control procedures that should prevent or detect them. Third, test of controls. To obtain evidence that the internal control procedures, which he intends to rely on, are operating as planned. The evidence may be obtained by addressing 3 questions. Were the prescribed control procedures performed? How were they performed? Who performed them? Fourth, final evaluation of controls. On the basis of the tests of controls and other information gathered, the auditor makes a final evaluation of the controls in the structure, which includes an assessment of control risk.
Assessment and documenting understanding of internal controls. Internal control can only provide reasonable assurance that management objectives are attained. The internal control are effective in reducing errors and fraud only to a certain extent due to the inherent limitations of internal control. Management override the internal control. Collusion among employees and with third parties. Personnel errors or mistakes. Cost constraints. Cost versus benefit derived from control must justify the cost of having staff with incompatible function. Internal control procedures may become inadequate due to changes in company size and activities.
Letter of Management. Letter by auditor to management at the end of his audit work. Listing any weaknesses in the design or operation of the internal control system which may have come to his attention. Explaining the significance and the effect on current and future financial statements, and make suggestions as the ways these weaknesses can be removed or reduced.
Contents of Management Letter. Purpose of the letter. Purpose of the internal control investigation. Disclaimer or clause that the weaknesses notified are not necessarily all the weaknesses that may exist. Weaknesses. Recommendations for improvement. Request information on remedial action.